1. Palantir's strategic pivot to AI/AIP is gaining traction. Palantir is evolving from a custom, services-based analytics company into a scalable, product-based AI platform provider, especially with the launch and expansion of its artificial intelligence platform, AIP. Why it matters? AIP is designed to let organizations deploy AI agents directly into their operations. This moves PLTR from a labor-heavy model, sending engineers to client sites, to one where software can scale across customers more efficiently. Investor impact. If Palantir can show rapid AIP adoption, it can generate more recurring revenue with lower marginal costs, a key factor behind valuation upgrades. This step is foundational. PLTR is becoming an AI-first software company, not just a data integration consultancy. This is the biggest driver of future value. 2. Commercial revenue is accelerating, diversifying its customer base. For years, Palantir was seen as a company overly reliant on government contracts. But now, commercial revenue, particularly in the US, is growing fast. Commercial revenue grew over 30% year-over-year in recent quarters. Palantir is signing up clients across finance, healthcare, energy, and manufacturing. Why it matters? Government contracts are stable but slow. Commercial growth is faster, more scalable, and boosts Palantir's appeal as a high-growth tech company. More importantly, software companies with strong commercial revenue streams usually trade at higher valuation multiples. This change allows PLTR to shed its government-only label and join the ranks of software growth companies. 3. Government spending on AI, defense, and data is surging. Despite diversifying, Palantir still thrives in the government sector, and that's not a bad thing right now. Governments worldwide, especially the US, are ramping up spending on AI, defense modernization, cybersecurity, and data analytics. Palantir is already embedded in defense, intelligence, homeland security, and law enforcement agencies. Why it matters? These contracts tend to be large, multi-year deals. Any major new contract, especially one publicly announced, can serve as a powerful catalyst for the stock. If Palantir continues to win new government deals or renew and expand existing ones, the stock could see sharp upward moves. 4. Strategic partnerships are expanding use cases and visibility. Palantir has entered key partnerships recently, including with Boeing's defense division, to deploy its AI platform in critical operations like manufacturing, logistics, and defense. These aren't just branding deals. They involve actual product implementation and adoption at scale. More companies, especially in legacy industries, are turning to Palantir for digital transformation. Why it matters? These partnerships validate Palantir's technology, open new industry verticals, increase recurring revenue, boost long-term credibility. Every new high-profile partner reduces perceived risk and increases investor confidence. 5. Strong balance sheet and free cash flow give it flexibility. Palantir is now consistently generating positive free cash flow, which means it can invest in growth without needing to dilute shareholders or take on debt. The company is debt-free with a strong cash position. Operating margins are improving as revenue scales. Why it matters? In a macro environment where investors are cautious, profitable tech companies with clean balance sheets are rare and highly attractive. This strengthens Palantir's valuation case and makes it more resilient during market volatility. 6. AI market tailwinds could create a rising tide. AI adoption is still in its early stages across many industries. Palantir has positioned itself not as a consumer AI company, like ChatGPT, but as an enterprise AI infrastructure provider. Companies need AI that's safe, auditable, and integrates deeply with their data. Palantir specializes in that. As AI spending increases, more CIOs and CTOs may look to Palantir as a long-term partner. Why it matters? Even if Palantir captures a small slice of this massive market, it could significantly boost revenue over the next 1 to 3 years. With more visibility into enterprise AI spending, PLTR could re-rate upward quickly. 7. Wall Street is warming up, upgrades and higher price targets. Multiple analysts have recently increased their price targets for Palantir. Some see 20% plus upside based on strong AIP adoption, better than expected margins, large contract wins. Why it matters: as institutional investors and hedge funds see these upgrades, they're more likely to build or expand positions. This brings more demand for the stock, often driving short-term rallies. Wall Street sentiment can be a self-fulfilling catalyst in the short run. 8. A 20% price target is technically and fundamentally reasonable. Assuming PLTR is trading around $179, a 20% gain would take it to about $215. That's in line with several analyst targets and requires only moderate upside on quarterly revenue beats, margins continuing to improve, a few notable contract or partnership announcements. In other words, PLTR doesn't need a miracle, just continued strong execution and a few visible wins. 9. Risk factors are present but manageable. Every stock has risk. For PLTR, the key risks are high valuation, already trades at a premium to some software peers. Execution risk. If commercial adoption slows, it could disappoint. Political/regulatory sensitivity. As a defense-focused firm, it's tied to public sector trends. Competition. Other AI/analytics firms are moving fast too. However, Palantir has shown an ability to navigate these well so far. As long as it keeps executing, the upside case remains intact. 11. International expansion offers untapped potential. Palantir is making deliberate moves into international markets, including Europe, the Middle East, and Asia-Pacific. Governments and enterprises abroad are also investing heavily in AI, cybersecurity, and digital infrastructure. Palantir has already signed deals with European defense ministries, the NHS in the UK, and various global energy firms. Why it matters: international growth can significantly increase Palantir's total addressable market, TAM, and reduce its reliance on the US government. These deals can also act as brand validators and lead to network effects in regional markets. New foreign contracts or geographic expansion announcements could be major catalysts for the stock. 12. Low institutional ownership means upside from new buyers. As of recent filings, Palantir still has relatively low institutional ownership compared to other large-cap tech firms. Many institutions were hesitant in early years due to the company's unconventional governance structure and heavy government ties. Now, as Palantir matures and proves financial discipline, more funds are opening positions. Why it matters: as institutional money flows in, hedge funds, mutual funds, pension plans, the stock can see price increases driven by sheer demand. A change in perception among large institutional investors can result in a significant re-rating. 13. AI is moving from hype to enterprise reality. Palantir is ready. While much of the AI hype in 2023 and 2024 centered around chatbots and LLMs like ChatGPT, companies are now shifting focus to real-world AI implementation, operational decision-making, supply chain optimization, predictive maintenance, mission-critical analytics. 12. Low institutional ownership means upside from new buyers. As of recent filings, Palantir still has relatively low institutional ownership compared to other large-cap tech firms. Many institutions were hesitant in early years due to the company's unconventional governance structure and heavy government ties. Now, as Palantir matures and proves financial discipline, more funds are opening positions. Why it matters: as institutional money flows in, hedge funds, mutual funds, pension plans, the stock can see price increases driven by sheer demand. A change in perception among large institutional investors can result in a significant re-rating. 13. AI is moving from hype to enterprise reality. Palantir is ready. While much of the AI hype in 2023 and 2024 centered around chatbots and LLMs like ChatGPT, companies are now shifting focus to real-world AI implementation, operational decision-making, supply chain optimization, predictive maintenance, mission-critical analytics. Palantir is well-positioned in this next phase, offering production-ready, secure AI tools that can be deployed safely within regulated industries. Why it matters: as hype turns into budget allocation and implementation, Companies want proven solutions, not just models. Palantir's experience in government gives it a credibility advantage. 14. Increasing AI regulation may actually benefit Palantir. Regulatory discussions around AI, data privacy, transparency, security are ramping up globally. Many AI startups may struggle to meet these new compliance requirements. Palantir, on the other hand, has been working in some of the most sensitive, regulated environments, military, healthcare, intelligence, for nearly 2 decades. Why it matters? Regulatory pressure could actually increase demand for platforms like Palantir's, which are already built with data privacy, auditability, and security in mind. This could become a major moat as AI governance tightens. 15. CEO Alex Karp's strategic vision is playing out. CEO Alex Karp has been very vocal about Palantir's long-term vision, building a foundational AI and data infrastructure company that supports Western governments and global institutions. While his style has been unconventional, the company's execution is beginning to align with his strategic narrative. Early investment in AI before it was popular. Building agentic AI tools with decision-making capabilities. Partnering deeply with defense and critical infrastructure sectors. Why it matters? A founder-led company with long-term alignment often outperforms over time. As Palantir's vision becomes clearer to the market, investor confidence tends to grow. 16. Short interest remains elevated, fuel for a squeeze. Palantir has historically had a high short interest due to skepticism about its valuation and business model. However, now that the company is showing consistent profitability and growth, shorts may be forced to cover if more good news hits, earnings beats, new contracts, etc. Why it matters? A positive catalyst combined with short covering can create sharp upward movements, especially in the 10 to 25% range. This has happened before with Palantir and could happen again under the right conditions. 17. Software economics. Marginal cost of growth is declining. As Palantir scales its AI and data platforms, the marginal cost to onboard a new customer is falling. This is classic software economics. Build once, sell many times. Operating leverage improves. Gross margins increase as fixed costs are spread across more clients. Why it matters? Investors reward companies that can scale revenue without increasing costs at the same rate. This margin expansion can justify higher valuation multiples, a key driver of stock price gains. 18. Palantir is becoming sticky, high retention and expansion. Once companies adopt Palantir's platform, they often integrate it deeply into their decision-making workflows. This leads to high customer retention, expansion revenue as clients add more use cases, multi-year contracts and renewals. Why it matters? Recurring, predictable revenue with high net dollar retention is a hallmark of great SaaS companies. As Palantir's commercial clients grow, its retention and expansion metrics could rival those of top-tier software firms. This increases confidence in long-term cash flows, supporting higher stock prices. 19. Cross-industry use cases expand its market opportunity. Palantir software is now being used in a growing list of sectors: healthcare and pharmaceuticals, aerospace and defense, manufacturing and logistics, insurance and financial services, energy and utilities. Why it matters? Broad applicability increases the total addressable market and reduces concentration risk. It also means Palantir isn't reliant on any single sector's performance. Investors value companies that can succeed across verticals. It creates stability and upside optionality. 20. Macroeconomic environment may turn supportive. If the macro environment improves, for example, interest rates stabilize or begin to decline, growth stocks like Palantir may benefit. Lower rates increase the present value of future cash flows. Investors become more willing to pay a premium for growth and innovation. Why it matters? A macro tailwind, combined with Palantir's company-specific execution, can amplify gains. The stock doesn't need just good company news. It needs a market that's receptive to growth. 21. Potential for product innovation and new AI features. Palantir consistently invests in R&D and new features or product launches. Especially around AI and data integration, could unlock fresh revenue streams. Expect updates on AI agent capabilities, user experience improvements, and deeper integration with cloud providers. Innovation can lead to upselling existing clients or attracting new ones. Script tip: look out for Palantir's upcoming product innovations. New AI features could further differentiate PLTR from competitors and accelerate growth. 22. Expanding into adjacent markets and use cases. Palantir is exploring industries like financial services, healthcare, and energy with tailored solutions. This diversification reduces dependency on any one sector. Success in new verticals means more cross-selling opportunities. Script tip: by expanding into sectors like healthcare and finance, Palantir is opening doors to new markets that could drive its next wave of revenue growth. 23. Scaling sales and marketing efforts. Palantir is increasing investments in sales and marketing to accelerate commercial client acquisition. More sales reps and marketing initiatives can shorten sales cycles. Improved brand awareness helps attract enterprise-level customers. Script tip: increasing sales muscle can rapidly grow Palantir's commercial footprint, an essential factor for hitting that 20% stock surge. 24. Focus on customer success and long-term relationships. Palantir emphasizes deep partnerships with clients, often embedding within operations. High customer satisfaction leads to renewals and expansions. Long-term contracts provide revenue visibility. Script tip: Palantir's focus on long-term client success builds stickiness, ensuring customers keep expanding their use of the platform, a big plus for investors. 25. Improving analyst coverage and institutional interest. As Palantir's story matures, more Wall Street firms cover the stock with bullish outlooks. This often leads to increased buying pressure. Higher institutional ownership typically supports stock price stability.